You know what? I wanted to see if I could get the chat up on screen. I think I have to pop it open into a new window. Let me see if I can do that real quick. Does this go? Nah, that doesn't go if I don't do it. I think I can pull up my current stream, though. Pretty sure. I feel like the YouTube streaming system is not very easy to, like, figure out because it hides everything from you. Stream. Yeah, what the heck, dude? How come you're not showing me my stream? Let's go to YouTube Studio, see if it's in there. Content, live, currently live. Okay. Can you get me the live chat? Oh, man. Oh, wait. Okay. Oh, but it's not showing me the chat still. Ah, odd. Okay, so I'll have to, I believe, pop it up. See, I can't even put it right here. Weird. Okay. I've actually done this before, so I don't know why it's being weird right now. Anyway, so the plan with this stream is I am going to be messing with some market sim stuff to kind of investigate patterns and just see in general what new features come out of having the order book as part of this generation process. So this market is distinct from a normal random walk because of the order book. It's not just going up and down randomly. It is purely based on the actual like order book dynamics itself, and so it's not technically random. It just has random orders that are placed in it, but this price is limited in that it can't go below these orders, for instance, without going through all of these orders. So it can't break beyond this price point right here. And my theory, essentially, is that's why you see these long wicks at low areas, and then that becomes a point of resistance later on, is because this has a bunch of orders right there. So it literally cannot get through there. And you're literally watching that play out live. That's so awesome. Look at that. Okay, I think I can play out live at the stream on my other screen, and I'll just like watch myself, and then I can see this stream. Okay. What's my opinion about gold? What do you mean about gold? Your Bitcoin explanation. I don't know anything about gold. I'm not looking into, like, researching it very much. Mainly because it's different than Bitcoin. It doesn't have the same Bitcoin cycle. I'm more into Bitcoin for the long-term research stuff, less about, like, macroeconomy type of things. So, haven't really looked into other assets as much. More just like the fine-tuning of, or I guess the fine-grained details of the order book and how that affects price. Which, again, you can see, like, very clearly, we had this price rebound off of this order book zone, and that's exactly what I predicted beforehand, which is really interesting. I kind of wasn't expecting that. So, okay. So, the big thing about this market sim, though, that's really cool, is that we can buy and sell. Right, so we can manipulate the market. And what my biggest interest is is there some way that we can create detectable patterns where, okay, let's say that we have a large volume spike right here, large candles going up. Does that mean that later on someone has bought in and then they're going to try to sell off and get out of their position? I don't know. That's my theory. So hopefully by manipulating around with my simulated market, we can see if there's any sort of like repeatable patterns or shapes that appear. Last time we talked about the Bart Simpson pattern, you know, where it's just straight up hairline and then straight back down because somebody's in a position, they've bought in. Hopefully the order book fills in, and then eventually when it does, we can sell off into it and hopefully get out of our position, although I'm kind of struggling at the moment. So, but Bart Simpson pattern, basically. You know. Also, let me know if my mic is better quality this time. Last time, it picked up my, like, webcam mic, which is, like, across the room and, like, not even... I don't know how it picked that up. So, and nobody said anything. So it was like the quality was terrible. So hopefully now it's like normal again. But so I'm just gonna mess around with this kind of more low key. Last time we were pushing the price up into the billions and stuff. I'm just gonna do relatively minor price manipulations to see if we can make any sort of money. And, well, yeah, first off, is it profitable to manipulate the market? Or is it... and is it detectable, basically? But, man, it's really hard to make money just manipulating spot markets, which technically this is a spot market, so, you know. It's not futures, so we can't use leverage, technically. And most market manipulation with Bitcoin and crypto happens in the spot market, and then they hedge themselves. Well, they hedge themselves in the spot market, and then they make a futures trade to actually make the money on it. But my question is manipulating in a spot market even worth it either? Bart Simpson's pattern happened in IBM. Oh, that's, yeah, it literally happens all the time. And once you see it, like, it happens all the time. It's so bizarre. Am I short right now? Yes. Okay, so we want the price down. I'm trying to not blow up the order book by, like, going way outside of the range, because then it kind of breaks the game a bit. But the problem I'm having is that this market is quite liquid. So it's kind of rebounding back into these neutral zones here, which is kind of odd. Yeah, so the AIs on my website are definitely more for research. Like, I wouldn't personally use it on a regular basis for like just blindly trading what it says. And I do frequently tell people, like, unless you really want to mess with the AI on the market, like, or on my website, don't worry about it. It's mainly for people who are interested in that. My bigger interest is just trying to understand how the market works and trying to study how price action works. And essentially the machine learning models that I'm creating I'm just trying to see, like, what sort of features do we need to pay attention to in order to predict future price action? Because if I can make a machine learning model that takes in, like, volume and stuff like that, and it works, then that means that volume is important in predicting future price. So kind of more research questions like that. No new thoughts about Bitcoin. I do think that maybe Bitcoin might be slower in getting to those lows that we've predicted. Man, my position here is just getting worse and worse. This is terrible. So definitely losing money on this trade. Very weird. So I do think that Bitcoin is going to hit into the 50s here soon. And by soon, I mean like in the next like I don't know, 3 or 4 months. But it's definitely bouncing up there cuz it's like kind of getting near 70,000, which is cool. Like I've been telling people I've been buying Bitcoin this whole time because we are in this sort of like bottom belly for the Bitcoin price, and eventually it's gonna, go on an upward trend. But for right now, it's just kind of chilling out, taking a while to get down there. Yes, so I've not fully gotten into Bitcoin, because I'm still working, trying to earn money, and like I am making more money to buy more Bitcoin since we're in the bottom, and you might as well, you know. So I'm just in a process of getting into Bitcoin as much as possible, and just putting like a couple hundred in here and there, and just do that over a long period of time, and then eventually you got like thousands of dollars of Bitcoin, and then you'll be set. My prediction for the low is like mid 50s. So probably 50,000, 55,000, I would say. And that's definitely October, in my opinion. So that'll happen somewhere around in October. But again, if it doesn't hit that exactly, it will just hit that bottom in that time period, and it might not hit an actual like price point. Yeah, and if you have shorts right now, it really depends on when you've taken your short. Because if you were getting into your short at like 60,000, depends on how high you want to hold on to it. Because it might pop up to like 72, 73 or something real quick for like a liquidity grab. But if you were getting into a short at 67,000, yeah, I mean, my assumption is it's gonna go down into probably test the 50s, 59s again at least once. I mean, we got months. We have months and months and months of Bitcoin going down before we start the next bull cycle. So it's gonna take a while. Definitely wouldn't necessarily be entering into longs at this position. So, yeah, 52 to 54, definitely. Very convinced we'll see a 70% decline. Yeah, and I think I don't remember if 70% is more or less compared to what it has been in the past. I do think that the declines have been getting less dramatic over the years, and so we'll see. We'll see if it actually makes it down there. Hopefully it does, Hopefully. The lower Bitcoin goes, the better. Okay, a DCA average short, 70K. Yeah, I mean, technically a bear market is the time to be taking shorts. You just, have to make sure you close it when it actually goes down. Because I think now is probably not the time to be too greedy with a short position, since we're getting ready to pivot. So, all right, we are in a pretty hefty short position. We got $500,000 locked up, and we have not scraped a lot of profit here. I'm trying to kind of let the market drift back up so I can get like more position up here, but I need to get out. I need to close my short position, and the only way I can do that is by buying into these sell orders, and they're just not selling below my profit line here. So I've been trying to push it down, but price keeps reverting back up. And if you remember, if I've talked about this before, the traders in this version of the simulation, Sorry, let me back up. The traders making trades in this version of the simulation have actual portfolios, so it's not technically fully random. So if I push this down, for instance, over here, they are losing money because they own a bunch of this coin, whatever it is, like Krafer coin, something. And that means that now they don't have as much money to be throwing at Bitcoin, and then they want to be buying at a higher price. So anyway, it just kind of influences the dynamic. And what I've noticed is that they kind of hover around like a neutral price line. Well, and then technically, since I'm short right now, I have flooded in about $1 million into this market, which isn't a whole lot compared to the market cap, because we're at a 150-ish million. I've only put in negative 1 million, and so I've flooded in, well, I guess it would be, almost 100,000 coins? No, 10,000 coins, which isn't a lot, but technically that's causing the price to kind of drift downward. Ideally now, we should be able to actually get out of our position. So I just have to be careful, because if I do it too fast, price jumps up. And of course, remember, when price is jumping up, everyone else is making money too. So then they start selling in. Oh, and then so technically, because I'm trying to figure out the dynamics here, like why does price revert? So if you think about this, the traders buy and sell randomly, technically. And that's the only random part about this. So if they're selling, Krafer coin at whatever, $95, and I buy it, let's assume that they're flat broke. They only have Krafer coin, so their entire portfolio is based off of Krafer coin. They're selling a Krafer coin right here, and they're broke. Well, I buy it, and now they have $100. Well, now they have $100 to throw at the price, so they can get back in and buy at a higher price because they have more money. And so what ends up happening is that people get locked in to these sell orders up here. And then as I fill up their sell orders, it converts these coins into dollars down here, and then they can just jump back into the market and keep pushing it up. So it's a very weird dynamic, and I don't know if I'm doing a good job explaining it at all, because it is kind of odd. But technically, price reverts a whole bunch, and it has to do with them having a limited portfolio, basically. Okay, so if I push the price way down, my goal is that a bunch of people now have basically, they're holding the bag, technically. So they just bought a bunch of coins down here. I sold into their coins, or sold into their purchases. So I swapped coins up here. So now I took their money, and they're left holding a bunch of coins. Price has gone down. Well, if they put a coin sell order right here, it doesn't get filled. And so maybe their money is locked up in that sell order up here. And so they actually aren't able to come down here and put in dollars, because they exchanged their entire portfolio for coins up here. So then price can drift down because they're left holding the bag, and then it's basically a pump and dump on a micro scale, essentially. Okay, so dang, we have now reverted, and I have not made that much money, and my position size is way bigger. How's it going? Not very good at the moment. We are stuck in a large short position, and we're trying to get out. So yeah, the volume profile is basically what's going on here, and I have a feeling that volume profiles work as an indicator purely because somebody like me has a profit line right here, and the volume profile is just kind of like detecting where that profit line is, and then it comes back into here. No, this is a simulation. It's a game I've been working on, so I'm just using it to kind of study like how does price action work, just to see if there's any patterns that you can kind of detect in real markets. Oh, the prediction high. Got it. Okay. So you're thinking that the past was 76, decline, and then it would be 70. Okay, would be 37. Okay, so you're predicting that this bear market low for Bitcoin will drop down to around like a 37 as like the ultimate low. If we're going off the 70% decline. Which, yeah, I think is a little bit low. I don't know if it'll actually get down there, to be honest. Okay, I'm trying to buy in to all of the orders and then immediately sell back into the low liquidity down here and basically try and force price slippage. And that way I can fill in more sell orders up here. So I'm going to see if that works. And that basically gives you these kind of large volume candles that are technically a bearish volume candle. But price is going up. And so perhaps when you see these, it's actually because somebody is getting out of a short position, which, you know, inevitably, because I've shorted, the market went down. But as I get back out of my short, it will stabilize back to the original position. And these red vector candles going down could indicate that somebody is manipulating the price up, I guess. You know, technically you're manipulating it down. And then as I manipulate it less, because I'm getting out of my position, it's just going to naturally go back up. Yeah, I could add a hedge position. I mean, technically, hedging is a form of spot market, you know, and it would just require me like buying millions of dollars. So it's basically the same as spot. So for instance, so this would be an example of what you would do in a hedging situation. Price is going up, I'm short, and I need it down. So I'll drive price back up. Now that price is way up here, though, I can sell into these orders. And that's driving my average price up. And even though I lost money technically by driving the price up, my floating profit is really low. I am now kind of hedging my position by getting extra sells way up here, and that's driving my average price way up into here. And then also what this does is this has removed all of this liquidity, so eventually I can drive price back through this zone because there's not as much price action in here. So let's keep driving, keep the price up here. See if I can keep selling into positions. Martingale strategy. Potentially, I don't know a lot of... I am not a quant trader. I'm not super familiar with a lot of like typical things. I've literally just been studying charts for years now, just on my own. I do have a story that I need to get into at some point where I literally, I guess, accidentally manipulated a market on MEX. With, you know, several $1,000s, and I actually didn't mean to do it. It comes from a longer story of like what I was trying to do. And I ended up doing this huge market manipulation, and it actually like made a whole bunch of money by accident. But it's basically this exact same principle of like you buy a whole bunch down here, you drive the price up, you sell down here, and you just, everything's basically a pump and dump. Or, if you're doing the opposite. But man, I am still struggling right here to get this price low. I don't know why this is happening. So I am cashing in on profit now, which is nice. See if we sell back into here, hopefully more of these orders come in. We are actually pulling in a bit of profit. I guess I won't say a hefty profit. Right, sorry. I got distracted. What's your prediction for the next bull run? I do think that 200,000 is going to prove a difficult barrier for Bitcoin. Kind of like $1 for Dogecoin, where it's like it seems like it should be able to get there, and everyone wants it to get there, but I don't know if the market is just... I want to say, like, I don't know if there's enough people in Bitcoin for that to happen. So I would say this. If mass adoption is big enough to the point where, like, governments start using Bitcoin, people start using Bitcoin to just buy and sell, and it's not just this kind of investment hedge fund thing, it's not just this ETF thing, and people stop viewing it as, like, scammy and all that stuff. If that happens, and there is more mass adoption, and people start being able to use Bitcoin to buy products and stuff, and it becomes more integrated into the economy, totally, 100,000, or 200,000, very, very easily. I just don't know if it will get there. Do you think Ledger is safe? What do you mean by that? Do you mean in terms of just like your wallet storage? I think like most wallet stuff it's not that deep really, I think. Oh yeah, no, there is definitely no way that Bitcoin will have any sort of hack or be like, I don't even know what, like corrupted in some way where it just drops to zero. That definitely is a thing that Jim Cramer says in order to manipulate the price down, because he is shorting Bitcoin and he wants it down. Also, there's just so many other coins in general that, like, let's just say hypothetically that Bitcoin completely disappears. Nobody uses it anymore, and it's proven to be like hacked and stuff. People will still use Ethereum and Solana and all sorts of other coins. And so I think crypto in general has a very long future ahead of it, but especially Bitcoin. I don't know. Yeah, so throughout the next couple of Bitcoin cycles, as Bitcoin becomes more well adopted, more mass adopted, it will definitely even out the sort of volatile cycles. It will be less dramatic, which, speaking of dramatic, you can see that I have naturally reverted to just pushing up and down the price a bunch because I am stuck in my position and I can't get out. And this is what happened last time, and I said I wasn't going to do this, but now we've done it, and this is terrible. Oh yeah, scared of a Terra Luna thing. For sure, dude. I understand that. I actually knew somebody who was in Terra Luna when that happened, and I was like, it was crazy. And he was in Celsius as well. And I think he had a bunch of money on FTX as well. All of that happened at the same time, which is crazy. Yeah, Bitcoin is very, very different because so it was made by a guy who literally had a PhD in cryptography. Um, my friend or Satoshi? What do you mean? Is he still among us? Martingale strategy is where you're buying a little at first, and then when price drops, then you sell off. Yeah. Okay. Okay. Yes, I fully. Yeah, I feel like Satoshi is Adam Back. I feel like there's really good evidence for that. I think it just makes a lot of sense. Adam Back was a political activist who protested a lot of the bank manipulation with the 2008 housing crisis, and then literally in 2009, Bitcoin gets released. So he also has a PhD in cryptography and had talked about making a cryptocurrency for a long time beforehand. So, in my opinion, he put a lot of work into researching, and yeah, it's Adam Back. Sorry, I'm probably not enunciating well enough. But I think he put a lot of research into cryptography, and he did it very smartly. Oh, I also had a theory that at the time, I believe if you looked at the amount of trillions of dollars that existed in circulation at the time that Bitcoin came about, I think if you divide like whatever trillion dollars that existed by the 20 million printed Bitcoin, it would make Bitcoin worth like $1 million, or it was some like flat even number that made a lot of sense. And so he very clearly made Bitcoin to protest like the printing of American dollars, and it was specifically for the US government. So hey, thank you. Yeah, thank you very much. I have a lot more videos that I want to make. I have so many more things that I've researched. I have things that I've researched that I just haven't even talked about because I haven't gotten around to it. Yeah, I have a couple statistics that I've found that are like 100% guarantee like statistics about stock markets and stuff like that, that I haven't really ever heard people talk about. I have some other things that are less like 100% guarantee and more just kind of theories about stuff. But in general, man, I got a lot of stuff that I want to get through. So I just got to work on it. I have so many things. I do typically work a day job as well. And so I'm kind of juggling everything all at once. So, but thank you. I appreciate that a lot. So I guess theoretically as well, we could just continue to drive the price down forever, because we are technically a market manipulator. I just am really struggling to cash in. Ooh, this is good. Wait. See, when price naturally goes down, then there's a whole bunch of sell orders that come in, and then we can cash in on that. Which, man, I guarantee you, this is exactly what market manipulators do. Oh, yeah, and double down when it goes, yeah. And if you have enough, so the martingale strategy of just when it goes against you, if I'm short, like, just keep putting more money into it. I mean, theoretically, if you have enough money, you can manipulate it however you want. Which is technically what I'm doing right now. Man, I'm just struggling to get out of this position, though. It shows you that at the very least, market manipulation requires a bit of assistance from the market itself, because otherwise, like, it's very difficult to manipulate this random of a market. Like, it almost feels like my net profit here is zero. Like, if I were to cash out, like, I feel like my net profit would be zero. Oh, I definitely, um, I do a lot more spot trading with Bitcoin nowadays just because I got super into doing futures trading. And it's very scammy, in my opinion. Like, it's possible. It's possible to utilize tools like trading platforms in order to make money. It's just very difficult if you're not good at it. And I ended up getting more into just spot research because it's, it's easier, no leverage, stuff like that. So I am going to put basically everything that I have into Bitcoin on spot. I do have some other coins that I've been looking at because I also think altcoins are where you get a lot of your like crazy gains. And I want to, I want to mess around with that. I haven't been a part of Bitcoin for, well, I guess more than just like the last 2 cycles. And so I haven't really been able to be a part of a lot of the crazy, Dogecoin, Shiba stuff. And there's a couple cool projects that have come out that I'm kind of interested in. But for the most part, just Bitcoin spot. You are programming quant bots as well, Raspberry Pi, and then you're pulling the live BTC through an API and then training AI on it. Hey, that sounds very in depth. Sounds like you got a lot of projects going on. That's cool. That's super cool. Yeah. Oh, you should post about that in the Discord if you haven't, or if you want to. Not a lot of people work on stuff, So it's definitely cool seeing people who are up to some cool things. It's difficult. It's difficult stuff out there. Oh man, why did price? So I am not manipulating this, by the way, when price goes up this quickly. This is definitely because I just sold into a bunch of people and they were stuck not able to buy Bitcoin. Or actually no, they were stuck holding dollars. And then I bought into that, gave them a bunch of coins, and then they started getting rid of their coins here because then they're making money when it goes up. So I don't know. That is the thing about being a whale, is technically other people are making money when you go up. And you have to be careful about that because then they're going to want to cash in and sell just like that. So I could have sold up here, but other people are making money as I pump it, and then they're trying to sell off, and I have to like kind of compete with them. Because I am technically competing with quote unquote the market. And even though this market is random, you can see it's very difficult for me to manipulate it. Like this is difficult stuff. So I really do think that there is a sort of like inherent market behind the scenes from people just naturally having a finite portfolio where if it goes up, they make money, so they want to sell into it. If it goes down, then they're getting a discount, so then they buy into it, which causes it to go up, and it basically neutralizes any sort of price action because it just stabilizes. So like really, markets require an outside influence in order for price to dramatically drift up or down. And with Bitcoin, obviously it is the halving mining cycle where people are dumping in newly mined coins. But in this one, it is me dumping in and out, and manipulating the market. So, what do you think about diversifying? Oh yeah, totally. I'm putting like probably 60, maybe 70% into Bitcoin, and then, spreading out the rest across a whole bunch of different coins, just because, I do think Solana as a project, as a chain in general, is pretty good. And I think a lot of people use it effectively. But Ethereum, I'm a little more like not super impressed with Ethereum in general, but I do think it will be an investment over time. But I think reserving at least like 10% of your portfolio for like, kind of meme coins and just throwing stuff out there is also fun. I have not added leverage traders. So that is the next thing that I'm going to work on, is adding take profits, stop losses, and liquidations for the traders. So that way, when you manipulate it, you can cause chain reactions where people get their stop losses hit, or liquidations with, slippage and stuff like that, which would be really exciting to mess with, because I also think that's where the majority of short-term price action comes from, is like open interest and, chain reaction, liquidations happening and stuff. I do think that Solana will definitely break that 300 barrier in the next cycle. I mean, everything's contingent on whether or not, like, crypto in general gets a mass adoption. I'm really hoping for it, like, this next cycle. There is a lot of evidence that governments are looking into, like, adopting Bitcoin and adopting cryptocurrencies for forms of payment, like the EU, or someone is creating their own cryptocurrency. I'm pretty sure Amazon and Chase both have patents for a, like, bank cryptocurrency. So, like, they're thinking about it, they just haven't done it yet. And once they adopt it, Bitcoin is still going to be like the king of crypto, essentially, because it is really like the digital gold, because it doesn't get printed beyond the 20 million. So eventually it will be a completely limited asset, which will make it scarce. And Ethereum prints, Solana prints, Dogecoin prints, all the other big coins print their coins. And so, like, Bitcoin is the only major, like, large market cap coin that has a fixed price supply, which inherently makes it better than any other crypto out there. And once people start using Bitcoin, or using cryptocurrency in general, as just like a day-to-day asset, just like how people trade stocks and stuff, that only makes gold more appealing, because it's an asset that you can trade, that there's a limited supply of, that isn't manipulated. Whereas, Microsoft, it depends on what the company's doing. Oracle had this huge run because of all the AI stuff, and then it's kind of been crashing, and it's just very volatile. Whereas gold is purely dependent on, gold. It's just a singular asset. And so I think that with Bitcoin, it's quite distinct from a lot of the other assets out there. Much less manipulable. And as we're seeing right now, I'm proving that it's just kind of like difficult to manipulate anything, because, gosh, maybe I'm just like bad at this or something, but I don't know what's going on here. This is terrible. I guess I've made $1,000, which is not very much considering how much I've bought and sold. What do you think of stocks, ETFs? I mean, I also have some ETF. I guess the Bitcoin ETF exposure. So, like I'm buying MicroStrategies too. I'm just buying everything just because now's the time to do it. I mean, you honestly might make more money by just sticking with Bitcoin, but I kind of think it's fun to have a lot of other just random stuff here and there. Higher VIP levels pay no fees. Wow. And they have their own market fund trading, so they can see the liquidate. Yeah, you're right. So Binance can see all of the liquidation levels of all of their customers, obviously. And so, yeah, they totally, I've thought about this before too. They totally see all of those levels, and then they can just, trade against their own system, and completely manipulate everything. Yeah, absolutely. I know, I would have made more money if I had just started buying, because the price has been going up. I have noticed that before, where the price will start at 100, and there's some randomness in how the portfolio values get generated, and so sometimes it can like drift upward because everyone has like more money or something, so then they can buy more coins, and then it drives the price up. But at this point, I am like not doing too hot, guys. What the heck? Okay, I am hovering more around the 10,000 mark. I was kind of getting up to like 15,000 before, so it's possible that maybe I can finally get out of this position. I'm gonna try to do that now. My day job is like I do construction, so I do a lot of contract work. So like remodeling type of stuff. Again, nothing fancy. I'm not like into real estate or anything. I just literally do like build doors and like windows and stuff like that. I've been programming since I was like 10 years old, and that was like more than 15 years ago at this point, which is crazy. So I just kind of picked up a lot. Yeah, I actually started out making video games to begin with. Like that is where I got most of my skills, I guess, with like programming. So making a market simulator game is actually what I am really good at. So I kind of want to turn this into a fully fledged something. Cybersecurity. What do you mean by that? See, what's sometimes nice too is the price will drift downward, and then like orders just fill in, and it's like I can quickly kind of nab those orders and get out. At this point, I'm not really trying to make a profit, I'm just literally trying to get out. If you've ever been in a like super small market cap coin, and you've seen the barcoding bars, that's basically what's happening right now. Is I have way too much money, and there is not enough money in this market, and so I can do whatever I want. Hey, look at that! My position size is slowly going down. That's kind of weird. So, me barcoding is actually working really well. So that's how I get out of the position. You're a physicist? Yeah, there's a lot of physics crossover with markets, to be honest, especially with Brownian motion. And actually, technically, I took a lot of physics in high school as well. Brownian motion was a physics idea that I just, had learned about with like molecular physics. And then later I started seeing random walks and I was like, oh, hey, this looks like Brownian motion graphs. And then I started looking into that and I was like, oh, so it's people have this theory of like random walk with markets and stuff, but it's all like atomic random behavior essentially. So, very interesting. Okay, we're at 4,700. That's pretty good, and we've raked in quite a bit of profit. So the barcoding is working. That's so odd. Why? So it must be that. Oh no, that's gonna ruin me. The fact that the price just drifted up by itself. So it must be that orders naturally fill in this kind of like void space between the lowest bid and ask. And if I do it quickly, orders, they don't have enough time to fill in that empty space, and so I can manipulate the price way down and basically force slippage, and then I can wait for more orders to fill in where I choose to. So I'm choosing to force the price to hang out at the bottom instead of the top, because every time it goes up here, I push it back down and it's forced to hang out down here. And then I push it up. And what I was doing before, this is actually really interesting now. Maybe I can get out of it before I talk about that too much more. That's actually really interesting. Okay, that gives me a theory. Okay, I'm just gonna... Oh my gosh, I'm so close. Okay, we made it. Wow. That's crazy. Okay, this is really interesting. The difference here is that I push the price up in order to fill in all of those sell orders. Like I made money because people were selling into my positions and then I bought up their sells. Well, after I did that, I pushed the price back down immediately, which then forces all of the traders to trade down here. But beforehand, I was pushing the price up by trying to fill in my short orders, and then I left it up there. So then when I wanted to inevitably push the price back down, all of these orders had filled in here, which made it more difficult for me to push it back down because I waited too long, essentially. That's really interesting. So let me show you more of what I'm talking about here. This actually works great. So notice I was able to, with like just a little bit of volume, not very much at all, I could make a huge candle that came all the way down here. And that's because people just weren't able to fill in this like order book region quickly enough to stop me from manipulating it. But over here, I've now waited a long time, and if I were to, sell, look at that. It doesn't go down at all because a whole bunch more people have filled in all of these orders here, and I would have to push it down into like here before we hit that empty order book zone. So I technically can't manipulate the market when there's this huge bid and ask wall preventing price from moving very far. So this is where liquidity comes in. Like, they are providing liquidity right now. That's really interesting. But when there's no liquidity, then I can manipulate the market a lot more. Hidden divergence. So you're talking about RSI indicators, I'm assuming, like hidden bullish divergence and stuff like that. I don't fully know what it is measuring. And I have another application or another market simulation that I've made where am I graph the moving averages and stuff, and I do want to look into RSI at some point and see kind of what it measures, because I would be very curious to see if hidden divergence is a real market phenomenon, or if, if that's just some like made up stuff. Ooh, by the way, I do have a video on the golden cross with moving averages and seeing how accurate that is. So that's going to come out here soon. Okay, so let's try buying this time. Let's get into a long position. I'm having some trouble though, because price is drifting way up, and I'm not in it yet. I need a position. Don't go up yet. Like, I'm getting FOMO, guys. And don't leave me behind. So this is actually interesting. I can manipulate a upward drifting market down, with a bunch of money, because I have a bunch of money, so I can manipulate it. And that is why meme coins with low market caps are scams. Yeah, exactly. Because if, even just 10% of that coin is held by a single individual, they can do stuff like this, all that they want. Although, technically, I believe that this coin, all of this volatility, has ranged between 100 and 110, and I think at its lowest it was like 80. So we're talking like maybe it's gone up and down like 10, 20%. And that's actually not very dramatic for a meme coin, for instance. So that's actually kind of funny. So it requires a huge proportion of the total coin supply in order to dramatically manipulate the price, which obviously I could do, and I am thinking about doing it because it'll be fun. But let me get a huge position size first on the long direction, and then we will drive the price up, or just let it go up. Market cap has now reached 200 million, so we're starting to hit like actual, like fully fledged meme coin status now. I know, I'll rug pull the chart here in a sec. Yeah, basically I'm DCAing right now. Yeah. But the whole trader coin supply and stuff is really interesting. In total, let's see, the total supply is 1.8 million, I think. Is that right? 1, 2, 3, 1, 2. Yeah, it's about 1.8 million. Which isn't a lot of coins, technically, but if a coin isn't very popular, it obviously isn't going to have a lot of people trading it. So we literally need an inflow of money into this market in order for this market cap to go up. And kind of what I'm testing right now is if we have a fixed, like, dollar value where I don't add more dollars to this market, and I don't really add more coins to this market either, what happens over time if I am siphoning out thousands of dollars? Because technically those dollars are coming from people in the market. And so you can see right here, for instance, one of these traders has only a $2,000 portfolio. On average, it's around $11,000, $12,000. I believe when you start the simulation, it's around 15,000, I want to say. It might be closer to like 12,000 though. But let's keep an eye on it right now, just because if I siphon out more money out of this market, technically nothing about this market has changed once I'm in a flat position, because I'm not adding more coins, I'm not removing coins, but I've made money. And so that means my money has been taken from these traders here, because this is a closed system. It's a closed economy. So I'm really curious then, what happens as I sort of siphon money out of this system, if we can actually see like the average trader portfolio go down an equal amount to my profit. But we'll just have to make a bunch of profit in order to make that happen, because $1,000 isn't really going to be visible. I believe there are like 100,000 traders in the simulation. I believe it's 100,000, which is quite a bit. So I guess I could calculate that by taking 1.8 million divided by, would it be divided by 50? Which, I don't know, is that going to put it... I feel like that's more like 40,000 traders, maybe 400,000 or something. I don't know. So I'm not fully sure how many traders, but it's somewhere around 10,000 to 100,000, and there's no more than that. So unless we get new traders into this system, all of our money that we make is only coming from these guys. So that means over time, I'll be making money and they'll be losing money, which is really interesting. But I kind of want to see if we can like visually see that. Also, this is kind of interesting, but I am now in a long position, and you'll notice that now price is drifting upward. So beforehand, I think one of you said that I should have just gone long in the very beginning because it kept pushing up. But you'll actually notice that over time, the price was kind of drifting downward, and it was kind of hovering around in this downward position over here. As I got out of the position, it came back up into this like neutral position, which is close to where it started. And then as I got in to a long position, now it's been drifting upward. So the market almost like remembers market manipulation, essentially. Like, as I am manipulating the market, the market is affected by it. These traders are affected by that, and that changes how much money they have available. And if I, take everyone's money, people don't have as much money. So they can't just be throwing it at the coin, which means that if somebody's charging a bunch of money up here, the bids don't have the power in this market. And so I'm basically siphoning out money, which is giving the people with the scarce coins more value. And so they can charge more money for it, which is really odd. Okay, so let's drive it way up here, and I'll kind of do a like continual upward like bull cycle here. I'm just gonna go on a mega like bull trend and just see what happens. So as it goes up and as buy orders come in, I will try to sell into those orders to make money, but still drive the price up. And that way we can kind of cash out while also driving the price up. So we're doing pump right now, and we'll do the dump later. That's not the market. It's just your portfolio with the aggressive selling. See that's the thing though, is once I actually get out of my position, like it is just up to the market, and it is not me manipulating it anymore. So like I have, and you know, this $3,000 here has come from somewhere because I didn't start with it. So that means I've like siphoned out $3,000 from all of these people, which means eventually when I make the market neutral again, they will be out an average of $3,000 across all of their portfolios. What I'm curious about is that has to have some sort of impact on the market, right? So my question is like, what exactly is that impact? So you can see right now, there are a lot of people who are trying to sell, and you can see why. Their average portfolio value has gone way up to 15,000. So that's worth it for them to sell their coins. They're going to be making boatloads of money, tons of money. So they'll keep selling and selling and selling and selling. And the key now is that they're trapped up here. So they have been trying to sell it up here, and maybe they bought here. And so technically it's profitable for them to sell up here. But once we pass that zone, like they are losing money. And that's really interesting to me because it should be detectable that they have lost money in their average portfolio, you know, and we're seeing them right here. They're losing money because they could have sold right here, but they didn't, and now they're stuck up here, which means that they'd have to sell all the way down here, which is way less profitable. And yeah, I'm super curious how this like will reflect that once I get out of my position. So, okay, there's a technique for trading order blocks. You'll have to tell me more about that. I know. The simulation is honestly a lot of fun. I need to add way more to it, though. Once I add liquidations, I also want to add a bunch of, like, indicators like RSI and stuff to this screen so that you can just see, like, how is the RSI impacted by me doing crazy stuff like this. Because also, technically, if I were to like really zoom out here, I'm probably graphing this on too microscopic of a scale. Like, technically, we could almost chart it like this, where like this is like one candle inside of like this whole region. Because these are a lot of like microscopic moves essentially, and these candles look really odd. But I think if you were to chart this on like a larger scale, it would look more realistic. Okay. So we've gotten to the point now where price has drifted all the way back down into my profit zone, which means that as we close this position, we're going to be losing money. Now that is okay because we have made a ton of money. So yes, I am thinking about trading my own AI on kind of like random order book stuff. And I'll kind of be able to talk about that more in some other videos and stuff, because I do have some reasons, some like scientific reasons for why I believe the order book is the most important part of, you know, markets. I really believe the order book impacts basically how all markets work. And technically, even if you can't literally see the order book, you know, and there's things like arbitrage where even if one exchange doesn't have an order right here, another exchange might have an order there, and so price will bounce off of it. And so even if you are like, well, we don't have access to the order book, so we can't, you know, predict price and stuff. It's like, well, actually, you don't need the order book to predict the order book. You can just, yeah, you can add like point of control or a lot of other indicators. And realistically, what you're looking for is kind of like the hidden order book underneath. And once you know that, then I think that's where a lot of these patterns come from. So I have, I mean, if you're talking about the API docs with my models and stuff, I technically have added API if you just have like a free account. I think that you can see the API docs. Let me know if you can't, because I did just add that, and if it's still not working, then that means that I messed something up and I have to fix that. It's just like in the account settings and stuff. I have yet to hear from anybody about automated strategies using any of my bots. I personally have found that it's really difficult to program a strategy just by itself. But I have found that my bots are pretty good at like predicting like kind of an average future price. And so I've found that like if price goes dramatically outside of the prediction, you can kind of like predict a reversal back into it. But it like doesn't always work. So definitely is going to take a lot of experimentation to kind of figure things out. It would be interesting to add real world manipulating techniques. Yes, which is, I mean, if you know any, let me know, because I am not aware of like a how to whale guide. Oh, this is interesting. Wait a minute. That's really weird. Wait, look at this. We manipulated the price way up into here, and I was in a huge long position. After I am now flat and I've gotten out, we have reverted to basically like the same level down here. That's really weird. Moreover, we are kind of close to that base level 100 price that we were in the very beginning. That's really interesting. See, this is what I'm talking about, though, where I feel like market manipulation is very detectable, because it's basically a deviation away from wherever the market is naturally inclined to hang out. It wants to be at 100. That's like where this market cap feels natural and where all of these portfolios kind of balance out. And as we push it out, it drifts back into that zone. That's interesting. Our average trader portfolio, by the way, I believe went down. Not by much. I think it was like 11.2 or 5 or something like that. But, you know, it technically went down like 2,000 spread out across everyone. So you mark the whole manipulation candle, and that's your order block. Okay, makes sense. So basically, this is your order block. Yeah, but I mean, yeah, that it makes a lot of sense though, because stuff like this, you know, technically that marked a point of resistance here. And even though it was reversing because I was manipulating it, you can still kind of detect where that will happen exactly. Yes, and then an iceberg order. Sorry, I'm kind of late on the chat a lot. A lot has happened. I was busy doing this. I'm just going through old chat messages. They're coming in fine. I'm just behind on it. So an iceberg order is technically what I'm talking about, where even though you won't be able to see it, you can kind of predict, like, okay, there must be a ton of orders down right here because price reversed here. And you might be able to see those orders. But what I'm claiming specifically is technically every single order is an iceberg order, if you think about it. Because unless you have access to like Binance backend and Coinbase and Kraken and MEX and every single other exchange simultaneously, you'll never be able to see the full order book. And not to mention, a lot of people just put in bot orders that constantly change, and they're trying to do high frequency liquidity providing. And so technically, like, you'll never be able to see the full order book. But you'll be able to predict, like, well, technically right here, you know, I'm not manipulating it, but technically as price drifts up into here, there must be some big order, and sure enough, yeah, there's some sort of block up here that's keeping price from getting past here. So I'm just saying that technically that implies that, like, if price comes back up into here, it'll probably reverse off of it, and we can use that as like a kind of statistical probability. Gonna build a simple trading bot. All right, man. Yeah, go for it. Let me know how it goes. Yeah, don't be too risky. Yeah, the order book stuff here is super applicable with pump and dumps and manipulation candles. Yeah. It is just very interesting though, because like, yeah, we can see that this is manipulation, but like, as the market manipulator, we understand why this candle appeared in the way that it did, which is more of my interest in this kind of whole simulation. It's very interesting. Yeah, automating bots is setting stop loss and take profit on the right position. I know, and that's where my opinion on like order blocks is that you'll be able to kind of detect, like, well, price is going to reverse here. So if I was going to take some sort of long position, I wouldn't want to go far beyond this for my take profit, you know? Yeah, stop losses, though, are also super tricky with bots because, you know, price can just wick up and then you lose your position even though it made the move that you wanted. And then, yes, dark pools. So it's basically any sort of order that you cannot physically observe is considered, you know, some sort of iceberg order. But technically, if you think about it, if you don't have access to the full order book, every single order is technically an iceberg order for you. Yes, and then with order blocks, as it hits that point, it will lose its resistance power over time, you know. Okay, so like for instance, this point right here, it technically was a reversal. And you could say, okay, as we hit it a first time and then second, and as we continued to hang out down there, eventually we crossed through that kind of order block. So, you know, there's definitely some science to a lot of it there. I think at this point, I am going to go ahead and just buy a whole bunch. And we're going to push this price up as high as we can go. And we're just going to see what happens. I think we've seen enough of the order block stuff, so. What's the sweet spot for models that have good predictions? Yeah, I see, and that is where it is getting really tricky. Because on one hand, yes, you can kind of see where the orders have like, or the predictions have some pretty good accuracy, um, but actually like implementing a strategy is is the part that I'm having trouble with. Um, so what I've noticed is obviously the Tiger model is my favorite right now. It has the best long-term accuracy in my opinion. Like when it makes a prediction, price usually hovers around where that future prediction is. So I would personally bet that the best strategy would be to have a bunch of tiger predictions, and then as price goes far away, like let's say a tiger prediction was like, oh, price is going to go like right here. If price goes way up, I would assume that price would come back down into that tiger prediction. So sometimes you can make like a trade where you take some sort of short from a high move up, a wick up, and then hope it comes down into the tiger prediction. Again, though, you really have to do it during market hours because there's just not a lot of liquidity during the day where like there's just not a lot of traders to move the price in the first place. And so if you're trading during like, you know, the middle of the night for Eastern time, price just doesn't move a whole lot. And then also once you take a trade, eventually, if price doesn't ever come back down, you do kind of have to get out of that position because, well, price might be going in a different direction. So like also instead of a stop loss, I would use like a timeout essentially. You could do a mixture of experts, totally. Yeah, totally. Yeah, in terms of LLMs, I have set up ChatGPT API through my website, so if you have a subscription, you can just use ChatGPT and see what it says as well, because I thought it'd be fun to visualize it. But my models are pure just like math neural networks, so they're not like complicated LLMs or anything. But I was thinking about making a couple different models that do each individual thing. That would be interesting. How do you research fundamentals? I am planning on making some videos about some kind of fundamental analysis. Like my best advice, honestly, is to just watch the markets. Like just literally sit there and draw stuff on the charts and just watch Bitcoin play out over time, and you know, stuff like that. That is the Oh yeah, definitely. Yeah, I'm keeping all of the VODs public. I just yeah, it's fun stuff. And people watch them long afterwards too, so happy to leave it up. Add a liquidation heat map. Yes. So are you saying a liquidation heat map for the market simulation or on my cat website? Because it would also be nice to have that as in like the real markets and stuff. In a normal market, you could take the highest candle in an upward trend and then box it in, and then price is closing down if price is going up in the box and closing under it a short signal. I think I'm having trouble visualizing what you're saying there. So you're saying that okay, so for instance, like this here, you take the highest candle, and then as it is closing down, in the box. I'm not quite sure what you mean by that. You'll have to explain. Sorry. All right, I'm just trying to buy as much as possible. We've driven the price up to 500-ish now, and we have tons of floating profit. That's very interesting. So I'm not going to cash in on it yet, but you've done your own experiments with market direction. Yeah, it takes forever to train. That is the biggest problem. Like, it is so time consuming. I literally have spent months and months and months. And the biggest problem is that you don't know if your model will work until after you train it. And so it literally, like, you can't even test it until after you've run a whole bunch of, like, training, and then that takes forever. So it's really ridiculous. But it's fun. Yeah, it's definitely fun. Oh yeah, definitely Bitcoin is the best market for the Tiger model. I actually I do have to say that for the Tiger model, I have noticed that using it in conjunction with like the big market cap altcoins, so Ethereum, Solana, Doge, and XRP, actually has given a lot of good signals where, like, if it's predicting that, like, it's going to go down on Bitcoin, and it's not predicting that for Ethereum or Solana or XRP or anything like that, it actually is a bad signal for Bitcoin. But when you use it in conjunction with all of the other coins and they all point in the same direction, it actually often is a really good signal. So I have noticed that, but I need to do some more tests into that. Manipulators use the heat map to push price into those zones and liquidate as many people as possible. Definitely. 100%. Yeah. Yeah, that's just absolutely what happens. And someone else was saying that Binance, has back-end access to keeping track of everybody's liquidation levels on their platform. And so obviously they're gonna manipulate spot and try and push Bitcoin into those liquidation levels because, they just make more money on it. So what makes markets move more aggressively in a certain direction? Yeah, well, yeah. And then that's what makes markets move. So I'm thinking about adding liquidation stuff to this simulation so that we can kind of figure out if or see what those liquidations look like, because it causes a chain reaction. Okay, so I want to try to sell into this now. It's just, this is going to be really tricky because so many people, look at all these people trying to sell right now. So if we can kind of wait for orders to come in and then hopefully sell into it somehow. This would be the dump part of the pump and dump, technically. So you can see that we're raking it in right now. But technically, once we get way down here, we're going to hit our profit line, and then we're going to be screwed. So that is the other part that's just so difficult about this, is like, I am in a $64 million position right now. And there's just nothing I can do about that. Like, we're stuck. Let's see how far it will just go down naturally. I'm just gonna leave it like this and just see what happens. So we've made a bunch of money, technically. We're just also actively losing money, but oh yes, try to create false support levels. I actually think that's technically what happened in here, was that as I like just slowed down with pressing the buy button, a lot of buy orders came in here, and so I was able to sell into guys. But yeah, I guess that is a good point. If you're manipulating it upward, the slower that you manipulate it upward, the more buys that are going to come in. That's actually really good. No, this is a simulation. Yes. Yes. This is not a real market. I actually am going to get back into buying real quick and see how this goes. Because what I want to test is if we go slowly, if we can get a whole bunch of buy orders into here, and then that way later on we can sell off into it. That would be interesting. That would be interesting. So I am pushing my average price down technically, which is cool. We always like that. If market is not manipulated, price goes up. It makes a higher high, then the price goes down, and if the price is coming up into the box again, then you sell. Okay. That makes a lot more sense. So basically you're saying like a rebound off of a high level. So the problem is, you know, technically if you think about this, this point right here is a rebound. But why did it happen is simply because I started buying in at this point, so it's not even like a resistance level. That's just me manipulating the market. So I wonder if you were to look at the charts and you were to notice like low liquidity where it's dropping down, and then suddenly high volume starts pushing it up, then that like invalidates this as a real resistance point, because there's actually no orders here, and it started going up because somebody was manipulating the price up. That's interesting. So yes, it is going down because the liquidity is from me buying, so everyone is, yeah, they are making money right now. Well, look at their portfolio value. They're worth 30,000. They're worth like 3 times as much as they were before. So they're making tons of money. So of course they want to sell off their coins because their coins are worth a whole lot. Hey, I appreciate that a lot. Yeah, I got a lot more work to do. Technically, I've been doing this specific research for, I guess it's been 5 years now at least, where I've been specifically researching like order book type dynamics. So yeah, I got a lot of stuff that I've been up to. It's pretty cool. Supply and demand zone strategy. Right, but technically if you look at it, the only reason this is a supply or a demand zone is because I am buying into it. So like that's not even like real demand. That's just me buying into it. So I bet you there are instances where if you go to, hey, I appreciate that. Appreciate the donation. Yeah, whale moment, dude. Yeah, I've been doing it for long time. I originally had gotten into crypto trading. Oh, I guess it would have been before the FTX crash. Yeah, I've got some long stories about the early days, because man, crypto's been a wild west for a long time. But yeah, I've got some fun stories about some trades that I took back then that were crazy. I also had some interactions on the MEX trading exchange that really have changed how I've looked at a lot of trading, because I ended up trading against a bot at one point, and it's a long story, but I figured out a way to make money off of a bot that someone else had set up that was algo trading on a small market cap coin, and it worked really well, but it's because somebody was trading with a bot. And then I was like, oh, most traders in the market world are bots, not actually people. So you're basically trading against bots, which at that point, it's actually pretty possible to make money because you just have to beat someone else's bot. So it actually makes the difficulty easier because you're not trading against a whole bunch of real people most of the time. Yeah, adding Fibonacci retracements and just other basic indicators and stuff are going to be super interesting. So yeah, and then yeah, the institutions, yeah, they also use tons of bots, tons of trading, but they also have access to a lot of like secret data and stuff, or not secret, but like, you know, Binance data and order book stuff from behind the scenes, and so that gives their bots a lot more information. In a market that's not so much manipulated. Are you tell me what you mean by that? Or are you just saying that like this is a super manipulated market and adding indicators to a, you know, not whale market would be interesting? And that is true. I agree. That would be interesting. Yes. Hello. Yeah. Welcome to the stream. Yeah. I will keep up the entire stream, so you can feel free to check out the earlier bits of it. Well, so this is what happened in the first stream, and this is what I was trying to avoid, but I did say that we would go ahead and pump it and see what happens. We have now officially gotten stuck in a position where our profit line is so far up here that there's just no way that we can get out of it now. Like, it is just impossible now. I'm kind of curious if we just let this kind of trail off for a bit. I wonder how far it will go before it stabilizes. I've actually never done that before. We should totally let this stabilize and see where it goes, because that will also tell us how our manipulation has affected like the market in general. That'd actually be a good science experiment. So I'll let this run and then kind of answer some questions. You've been trading for a few years. The only thing that's actually made money is small caps, and I totally agree with that. Yeah. Yeah, a lot of my best trades were some sort of like new altcoin that popped up and it was like starting to get popular, and then I would take some, you know, big trade on that, and then within like a day or two after it pumps, just getting out of it. Like, those are honestly the best trades, the very quick ones. But yeah, if you can get into some sort of trade that isn't determined by, well, a lot of this random order book dynamics, and it has like an outside influence, those are the best trades. A lot of the trading in day trading is very random, which is why I like the Bitcoin cycle so much, is because the Bitcoin cycle is not determined by order books or trading platforms. It's literally based on the printing cycle, and that's a whole economy. And that economy is worth billions of dollars. So it's very difficult to manipulate Bitcoin. And so it's like a very solid bet each cycle. The 0.82 in Fibonacci is a big support or resistance for some reason. I also fully believe that Fibonacci is due to order book dynamics. Because, okay, so technically, let's just say we've pushed up this price way into here, and eventually price is going to come back down into some zone down here. My suspicion is that it'll be somewhere around that like 0.6 to 0.8 Fibonacci retrace from like this to this. But I have a feeling in general you can detect a lot of those retraces, like, okay, from here to here. That's like about a 0.6 return. I have a feeling it has to do with how the order book fills out. You know, okay, here's like another example. This one, there's a kind of 0.6 retrace. So there's stuff like that where I feel like a lot of those retraces are because orders start to fill in here, and there's just enough orders to slow down price that eventually it hits, yeah, that golden pocket. So very, very interesting. But my theory is that Fibonacci retraces are definitely mathematically solid, and it has to do more with the order book. So what platforms do I use? I used to use MEX way back when. They kicked off US traders though like a few years ago, and so now I found that BTCC allowed KYC with a Palau ID, so I did that. And that's if I do any sort of leverage trading, although for the most part I kind of just buy spot Bitcoin nowadays. So with Bitcoin you can get pretty good API data. Yeah, my biggest trouble is finding long-term historical, like 1 minute data, like super granular data. Binance, I think, only has spot data that you can download. And then MEX provides futures data, but only up to 30 days. And I have yet to find a good perpetuals data that's like, you know, more than 30 days or so. But it's pretty noisy nonetheless, and I've got some theories about that with like machine learning and stuff, that the noise actually might be a good thing. Kind of some diffusion type of theories with it, but yeah. Retrace supports were from algo programming. Buy after. Oh, that is a pretty good theory, to be honest. I bet you a lot of indicators and stuff are from algo programming, where like, yeah, it's like, oh, we're having a pump and then buy after some sort of retrace for a continued trend or something like that. Yeah, if you can figure out what someone else's algorithm is, then you can just trade against their algorithm. And that's what I ended up doing on MEX that one time. I'll make a whole video about it. It's kind of a long story. It's cool though. Yeah, new coins are definitely a bit of a gamble. Okay, so on meme coins, you only do longs on meme coins during a Bitcoin bull market. And you got to remember that last bull cycle in, I guess that would have been 2024, the ETF news had just come out for Bitcoin, and it was Bitcoin was popping off and meme coins were just popping off like crazy. I don't know if we'll have as big of a meme cycle because now we've had all of these like Terra Luna incidents, FTX, Celsius, just crazy stuff, and now everybody and their dog has a meme coin, and so I kind of think people are a lot more skeptical. Shiba didn't really go anywhere. Doge is still kind of mid, and so I think people are a lot more skeptical. So I don't know if we'll have big meme coin seasons anymore. But it's worth a hope. I didn't. It's really funny. I didn't actually lose money on meme coins. I lost more money just doing like stupid day trades and stuff, which is really funny. And Terra Luna Classic. Terra Luna Classic was terrible. Yeah, Fibonacci levels, just looking at the market dynamics. Yeah, super cool. PyNX, okay. You can run TradingView bots on it. Interesting. BTC and big caps are too efficient to make profit on. Anything lower than that? Yes, I kind of agree with that as well. Look for low caps, and that's where you get anomalies. Absolutely. I cannot skip forward in this simulation. So I really struggled with this when I was programming it. It like takes so much compute to compute all of the price levels and all of the different traders. And you can't really tell because I already am fast forwarding through it a bunch. But like there are hundreds of thousands of trades that are happening per candle. And it just shows like, I think like 10 trades, 10 updates per candle, but there's like way more trades going on. Anyway, it's crazy. This is taking really long. At this point, it just looks like a meme coin. Like, look at that. We have our IPO, and then it just terrible. Although it is actually hanging out at 250 pretty well. It's impressive. If I push it down, we might be able to speed up the process a little bit. And let's just see if it keeps going down from here. So I'm just speeding it up. We'll see where it goes from here. Okay. Hello. Hi. Yes. What algorithm are you specifically asking about? And I'll let you know. Small cap trader said that manipulation has been changing over the years. He used to short the big pumps, but now pumpers know people will short and do a second pump to trap the shorts. Yeah, there's all sorts of like PvP trading crap that goes on, I'm sure. That's really funny. So they trap shorts in a pump. That's very interesting. Coin swapping. I did try to do coin swapping, and I never did it enough to like actually make or lose money. And I'm not fully sure actually a good strategy. So if you've ever tried that, you should let me know. But I guess that would be an interesting thing to look into, because I'm sure the arbitrage on coin swapping pools is a lot better because less people are going to be doing coin swaps than just like, day trading and stuff. The thing with small market caps is that it's easy to find an edge. That's fair. Yeah, that's fair. I do feel like Dogecoin has a lot more volatile swings to it. So it'll kind of follow Bitcoin, but I feel like the moves are bigger, and so you can get more of more of an edge on it because of that. Oh, so this algorithm right now is it's a market simulation, And it's not a random walk simulation. It is an order book simulation. So there's a whole bunch of traders in this simulation, like 100,000 traders. They all have a fixed amount of, let's say, Krafer coin and dollars. And then they just randomly put orders into the order book. And depending on what type of order they put, it either places a new order or it takes up an existing order, and then I graph it. And that's kind of it. Like, it's super simple. But all of these weird kind of emergent dynamics come up from it, and it's very interesting. So, oh, the 0.882 is where it's at right now? Or did you mean up here? You might have meant up here. I probably just read the message late. Yeah, it's definitely a little further now, though. But you're right. That is interesting because this is an exponential curve that probably would have eventually curved out like somewhere here. And in fact, you'll notice that price is going up. So it seems like the balancing price for this market is somewhere in the middle right here. It's probably where these two lines converge. Wait, if you think about it, if you draw a trend line right here, and you're to say, okay, there's some sort of exponential trend coming out of here, and, I don't know, like here? Gosh, I'm not good at imagining where this graph would be. I feel like here, somewhere like here. And then this one, we were to graph it like forward, where they intersect is probably like a supply and demand equilibrium. That's interesting. Well, so if I buy in a whole bunch right here, then I'm like spamming the buy button. Okay. Oh, no. Go back down. No. Okay, there we go. Let's see where this goes. And maybe I can move my average buy price lower, although it's pretty darn high as is. Anyway, okay. From when I pick up, it's some sort of order flow reading. Kind of, yeah, basically. So it more so is just literally people are putting in orders in the order book, and then I'm just literally graphing like what happens as a result of people randomly placing orders. So tons of science I feel like you can get from that. You did mining back in 2021. Dude, I thought about had I been into Bitcoin mining back when I was in college too. I did not have to pay for electricity, so I could have made so much money off of that. Did not do that though. Yes, humans are not truly random, but what I'm curious about is if we assume randomness, are there still predictive patterns that emerge as a result of the order book? And if there is some sort of pattern, like for instance, okay, trend line here, then that implies that a trend line is a true mathematical principle of real markets, for instance. Therefore, because we've removed the human element, and yet something like a trend line is still showing up, just for example, then that would imply that in a real market, you can expect that a trend line is actually like a real principle. There is a study that some guys did a while ago where they proved that trend lines do show up in markets more than in a random walk. So a random walk is just where the price randomly goes up and down. The order book, on the other hand, if price is going to move down here, for instance, it has to go through all of these orders, and so that kind of changes the dynamics of like how does price go up and down. So yes. Oh, okay. Yeah, of course. Yeah, I was gonna say, at some point I would like to put out some more free tools. But yes, if this is helpful for you, then like, heck yeah, I'm super happy about that. Planning on doing a lot more stuff like this. I've just been super busy with working on all sorts of different research things. So anyway, more to come. Lots more to come. Pump and dump. Oh, I guess, yeah, that we just pump and dumped again. Yep. Although this one back here is much bigger. Much bigger. Okay, so price is actually doing some very interesting stuff right here. How odd. It is making like an exponential curve into this like bid and ask barrier now. That is interesting. So it's almost like we've reached an equilibrium point in the price. So if I let this run for like a really long time, it will be stuck here. That's interesting. Oh, you were about to become a miner back when it was 100, 300. Yeah, that would have been the days. Wow. As a two-person game, yes, this would be incredible because yeah, what would be a lot of fun actually is to set up some kind of like multiplayer server where you have a whole bunch of different people trading. I would like to do that at some point. The exponential logarithm curves crossing. Tell me more what you think about that. I'm seriously like, I need your guys' perspective on this because like this is really interesting. Okay, at this point, I'm kind of thinking about what to do with the market here because I could manipulate it back up again. I guess there are a whole bunch of cells in here, so maybe I'll do that real quick. We'll see if the price drives down after this. You stopped trusting normal patterns way back. Yeah, because you knew that there was some guy who could just manipulate the market. So, yeah, I 100% agree. I think that most of the normal patterns are totally fake. Where's the Discord? Oh no. I didn't even add a description to the video. It's somewhere on my channel if you go poking around on my channel. Yeah, I'll yeah. Sorry. Yeah, I don't know where it is. It might be on like another video or something. Hopefully it's in my channel description. It should be, but I know. I also was thinking about having kind of like a competition at some point and just having a whole bunch of people play on the same market and then see who can make the most money. Yeah, but that's better for the other version of this market simulator. I have another one, and I'll look at that one next week. I think I'll do another stream and I'll play that one instead. So yeah, I think I'm gonna cut the stream now, just because this is kind of getting boring, to be honest, and it's just doing the same stuff over and over again. I am currently $100 million deep into a position. Well, okay, tell you what. Let me spam the... no. Let me spam the sell button. We haven't done that yet. And I'm just going to crash the price, see what happens. And then I'll be done. So, how about that? Is the whale manipulation profitable in this simulation? Technically it is. I just messed up and I got into a really big position and now I'm losing money. So, yes, if you don't dramatically mess with the price a whole bunch, you can make money. It's just very painstakingly slow, which is why people use leverage, even whales, which is interesting. Oh, no, no, no. I don't think I took that in the wrong way. So don't worry about that. Yeah, I was just trying to explain. I mean, that is kind of the whole point, is like, is it even profitable at all? Like, why? Okay, it's gotten really loud. Oh, that's really funny. Okay, so I programmed it. Oh, it's gonna get loud. I'm so sorry, guys. Oh gosh. Here, let me turn down my OBS real quick. Okay, it's still loud for me though, but I programmed it so that the volume had to do with the proportion of the percentage of the price change. So as we drop down, it's jumping up like 40%, 50% every candle, and so it's making super loud noises. Okay, so we hit 1 cent down here, so that's pretty good. All right, good. Yeah, I turned down the sound a bunch, so hopefully it's better. It's like clipping my headphones right now. Okay, I want it to go back down to 1 cent. Like, just stay down here. Stay down. Don't come back up. I am pouring millions of dollars at this coin to keep it down. You can't keep this coin down. Look at that. Wow. Look at all of these people who just bought in or want to buy in down here. Sounds like a slot machine. No, you're right, it does. Well, that's really interesting. This is technically what happened with Terra Luna Classic. In fact, this almost looks exactly like the graph that happened after Terra Luna crashed, because it crashed all the way down from like, 200 or 300 or something. And then after it crashed, it had a bounce. That's pretty impressive. I'm actually really surprised that the price has come back up. Oh no. Okay, so this is a bug. I don't know how this guy has negative money. But I think there's a bug somehow where somebody is able to buy like negative coins. And so as the coins go up in value, because he owns like negative 20 coins, it goes down. Yeah. Margin called. Jackpot. Wow. All right. Well, so that's pretty fun. Anyway, if you want to get the Market Sim, it's on my Patreon. You can check it out. I'll be making some more updates though. I'll be doing some more videos about how this is going. But anyway, thanks for tuning in, guys. That was a lot of fun though. I'll think about doing another one next week or something. I want to add some more indicators and stuff to this. So anyway, I'll leave you to enjoy this for a bit while I close up shop.